The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. I am the host of the Tiger Technicians Hour, but also the author of the Opening Call Daily Newsletter, where we've been raising a lot of cash lately. We're waiting, we're looking, we still have the shorts on the Dow for the downside, still have a couple of longs. I have to tell you, this is very serious. Let me just show you a couple of things. The market is all about fractals. That is, there are certain patterns that repeat over and over. Why do they repeat? That's human nature. Human nature gets kind of doesn't notice something, then it does notice, then it gets very enthusiastic, then it gets over enthusiastic, and then it starts all over again. But what we're looking at here is the dollar hits 121 round number high back in July of 2001. Actually, I must check that because it might have been smoothed out. This is an index. It isn't the actual cash price. 121.00. Yep. And as a result, it made a peak E in the Chapman wave, and it pulls back very sharply, comes all the way back to the 70s a couple of times, 70, 72. Then it has a really strong rally, and it goes all the way to the 100 area, pulls back, goes 103, and then has a much sharper decline to the 200-period moving average of 88. But wait a minute. You see this? It's almost like Aladdin's magic lamp. You see this bowl formation with a little handle here? Wait a minute. There's a little bowl formation right there with a handle. So that to me is very important because it's repeated in a tiny, it's the macro with the micro right there. Will it then break out to the upside? That's the dollar. I'll talk more about it in a moment, other than to say that at 97.95 right now, holding really well when gold's had such a spectacular move, try to separate, try to keep the dollar as one instrument. It's what I call the Harley Davidson, not the company anymore, but the icon of Harley Davidson around the world. The dollar is that representing America. That's really, to me, make it simple. It's the currency of most import. Now, keep it simple. Hey, wait a minute. You've got the bonds, the TLT. The TLT, look at this. We've double topped. We've gone above the 143.62 high of July of 2016, plummets down to 111, zips up in leg C to the upside, and it goes to today's high of 145.38. Hey, 145.38, that's a new recovery high. But if you go to, and I'll do that really quickly now, I'm going to go to recent plan. There it is. If you go to this chart right here, you'll see that yields have been here before. It was quite a while back, but the 30-year is the white one, the brown is the 10-year T-note yield, and the cyan is the 5-year. But wait a minute, let me squeeze this close like I did the other so that you can get a much bigger picture. So you go all the way back to the 48.58 high, 4.85 high in 30-year yield back in 2010. I wonder if I can make this even tinier. There. You can go back to June of 2007, where we were up at 50.62. Did I hear something going on in the background? 50.62. And what we're looking at is you've come down, and now I have to make this a little bit bigger so you can see it. You can see that what we're doing right now, we've been here before. You see this red line right here? We've been here many times before in the 5-year. We've been here before in the brown 10-year. Not that often, but we have been there. And in the white, the 30-year T-note yield, T-bond yield, we've been here as well. That's going right through there, but not that often. So what has intrigued me, why I think this is different to other times, is because this is the first time that I can recollect, since that high that I showed you back in whenever it was, the all-time high that I said occurred. Since then, not all-time, that was that particular high. Look what we've done. You see the way the brown the 10-year yield, T-note yield, is overlapping the 5-year yield before you made troughs, and there was a nice space between them. In other words, each one was independent. Now you're getting this overlap of the 10 and the 5. That, to me, is something that I've got to keep in mind as something different. I don't recall seeing that at lows. I've seen it occasionally at highs. Look, it overlapped just a tad right there when you were making that peak D high back in June of, there's a weekly chart, June of 2018 at 3.247. So this to me is very important. Look behind this chart. I have another one here that I show my subscribers to my opening call every weekend. The Wood iShares Global Timber and Forestry ETF, this is world economy because it's a global timber and forestry ETF, is making lower lows. Lower lows, when I say lower lows, I mean lows that haven't been seen since 2017. And we're talking about a weekly chart. So this is really something, and you're seeing a turn down in the HGX, the Philadelphia Housing Index. So to me, all of this says the peak Ds that we are looking at in the daily, in the weekly chart of the Dow, the S&P, the Qs, and the IWM, this is the first time I'm saying I think it's kind of important to be monitoring it really closely because we could have a deeper and longer pullback here than we've seen other times. Not sure about the 3 months of going into December low, but certainly in all of this year, I'm respectful of that. The other thing I've got to keep in mind is that I used to have an expression. I haven't even had to use it for years. The expression was, let's hope we don't double the noontime price. In other words, it's to the upside. We're up 100 points. Sometimes you get a double to 200 points by the end of the day, or you're down 100 and something, and it doubles that. I don't want to be doubling 630 to the downside today. I mean, there's a lot of evidence that says that's a possibility, but I'd prefer we have a really good rally starting in the next 15 minutes, just a nice bounce of 180 to 220 points to get off these lows. Now, the next thing, so I said, you've got the dollar, keep it as a separate thing. You've got the TLT bonds, keep it as a separate thing. But wait a minute, you've got gold. Look at the pattern. This is the same, the bowl formation that we saw in the dollar, and now you're in a leg C, almost breaking above the 1538. This is the continuous contract. High of the week, this is a monthly chart, of August of 2013. The high so far has been this month, let's see, 1546. Oh, we've gone above that. Okay, I forgot we went above it. So we've gone above it. I believe this is a leg C. There should still be a leg D to come. Gold is in play. T-bonds are in play. But so is the dollar. How ironic is that? Now, I have to chuckle because there's years and years ago, I mean decades ago, I used to draw cartoons, and I had a whole series that I drew on financial markets, on the stock market. I had them in different things. They've been in the, in fact, for a little while, they were in the National, Market Technicians Association a couple of times. There I had other cartoons. They weren't the financial ones, they were other ones. So this one that I drew way back says, let me show you the drawing, because if you've got my CD, you'll see there are a couple of, this one isn't there. I'll show you this and I'll read it to you. I'll read it to you as we go to the break. And what does it say? It says, with the market opening up 20 points, this is when the Dow is down at 2,200. I think it's okay to go out for a while, a short while. He says, sure been volatile lately. He says, having risen sharply, opening the market, it's now down dramatically. Uh-oh, he comes back and it's up. I love these quiet days. That's like yesterday.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So so this is showing the 10-minute E-mini leg G to the downside. Will this become a reversal area? It should. At 28.56, you should get some kind of a bounce, at least to 28.65, 28.73 in the next hour and a half, surely. Okay, so let's get back to what I wanted to look at today. We're going to go through the numbers again. The Dow is down 636. Look at this pattern right here. In the 10-minute chart with the Chapman wave automated support levels and resistance levels, light blue support or green, and light blue and green on the way up is the resistance. 25,616 is the 10-minute support. 25,796 was the previous one. Look at those fantastic resistance points at the 26,375 area, and we went just above it yesterday before reversing. So we're looking at 25,334 in the 120-minute chart. Nothing in the daily until you get to 24,500. So let's just leave that for the moment. And 24,000 weeklies, 24,630s. Very strong support in that area, two of them 24,650 as well. And then in the monthly, you have one right at the 21,264 level. That goes back to the December low. So you can see, and the reason why I was getting so cautious for subscribers is look at all the resistance levels, automated resistance. Let's do the S&P, SPX right now. S&P is trading down 70. Oh, we haven't seen that for a long, long time. 28.55. Down 70, no support levels except right here, and that would be at 27.72 on the daily and 28.53 on the 10-minute chart, which is a little bit lower, 20 points lower than where we are. And then 28.15 on the 120-minute chart, nothing in the weekly until 27.36. And then monthly is 22.65. So let's go to the QQQ, 1, 2, 3. QQQ, 182.99 is key support. It's already gone to 183.25. Went a tad lower. It's trying to bounce a little bit. 169 in the weekly chart, and 183.62 has been pierced, so 180.36 is next with very strong 189.58 resistance. Let's look at the IWM. The IWM right now is trading at 146.80. down 377. 146.18 is the 10-minute support level. 147.10 is the 120. We've already gone through that. But look at the daily. It actually has one in here at 146.25. So between the daily and the 10-minute, two outer bands. One is the larger daily. The other is just a very short-term, the near-term support of 146.18. That better hold, or we've got a real problem there. So I also want you to show you now, look at gold. This is very interesting. Gold has resistance of 1630 on the 10-minute chart. It's trading at 16. Did I say 16? I meant 15. Somebody must have just said, whoa, 16. No, 15. 1530.40 on the 10-minute chart and 1542.90 on the daily chart. Nothing on the weekly, just major support levels, and then open on the upside. Monthly has 1476.98. We're already way above that, and then you get to a lot on the left side of 1520 to 1526 resistance, and the 120-minute chart just disappeared. There it is. Had 1485.32 as key support, and now we've bounced nicely off that. So gold is in play. Now it's up $16, $15.9. So this is, as I say, gold, I would not write it off at all. It is in play. It is really important. Let's look at silver. Silver right now is trading at 17.26. It's up 28. And it has 1764 daily resistance. What is this, 120? 1725. We're just right there now, and nothing in the 120-minute chart. So that says upside has a little bit of room to go. Look at the dollar. The dollar right now is trading at 97.96. It has broken to the upside. 97.97 where we are right now. That's the 10-minute chart resistance. 97.85, 97.83. We've gone up slightly above that. In the 120-minute chart, that makes 98.04, the next resistance. But look at the monthly. It says, wow, to really break above the 98 so that we can go to par, you're going to have to do a lot of work. And that means that we could be bumping into resistance very soon again in the dollar, and that would help gold. So this is going to be, that's what I'm saying. This is such an important week. Crude oil right now is trading down 2.74 after a really strong day yesterday. But I've been claiming that it's stuck in a range, and it should stay in that range at 54.35. That says that 51.47 will be the key support level. Sorry, it has a couple of others at the 53. 28 level. Yeah, so crude oil is in this range. Now let's go to the real thing, which says, here's your gold stuck in that range, but it's up at the higher end of the range, up 15.7. Really good action in that leg D. It's a peak D if it doesn't make a new high today, and leg D in the weekly chart. These are all very important periods in each of the sectors. Why? Because the dollar is already in leg. Look, the dollar's already made a peak E. Now it's in a gray leg A. It could fail here until it breaks into the 99s. This has to be considered a potential for a double top, or it could fail here. So the weekly chart is really improving a lot, but I'm saying those are the levels to watch. If the dollar in the next, by now to next Tuesday, breaks under 96.30, hey, that's a big deal. That means it's fading. Oh, by the way, a week from tonight at 5 o'clock to 6 o'clock, I'm doing a webinar for subscribers. You can become a subscriber. In fact, this is a really important time because we're out of some of our positions that we were basing them on the last webinar. We're out of some of those positions. Still have a couple. We've got out of one at a break-even price. It should have been break-even if you got out pre-market, or you just lost a few pennies. I'm concerned that this particular index, which is the IAA, is actually deteriorating technically now. Now it's gone to a leg D in the daily, and that makes us absolutely a peak F top in the weekly chart of 66.62. That's saying to me, don't be in a hurry to be buying here. This is saying to me that if the brokerage sector is starting to see deterioration in price, have patience, because that is kind of a harbinger of future things. If the XLF is going to a leg D in the daily chart, a peak D in the weekly, and breaking key support level, be careful. These rates you can't dismiss breaks to the upside like this. Now, will this little doji candle with a high today of 145.53, will that turn around in a leg E, a gap up to a leg E? Will it become a peak E with a little doji candle reversal? No, I can't say that, because the leg D in the weekly chart did exactly what we were looking for. We don't have a position, but this is what I said. We've got a price time match that says 143 should be hit by the week of the 2nd of August. Well, we're a week and a half later. So we've done everything that this particular chart formation said it could do. So I'm respecting the fact that the Fed, the rates are being forced down. There's a competition for the lowest rate. And what do low rates force? They force Tina. There's no alternative. But now you can see even the market is very hesitant. I'd be very careful. Pushing yellow light, red light. Careful. I'll be right back. Basil Chapman.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So let's look at this. Dow, DE, this is going to be Germany. This is exactly what the German stock market chart formation looks like, except I've got it through the Dow Jones German, it's called German Stock Index. makes a peak right there on the 4th of July. That was the last peak. It's done it before. The major high was back at 453.30 in January of 2018. Plummets to 336, rallies up to 400, pulls back to where it is now at 358. There's that dreaded H pattern. Let me just show that chart again so people know what we're talking about. In the Chapman Wave methodology, and I'll be using this and showing this in great detail in my 1-hour webinar coming up 6 o'clock, 7 to 7 o'clock a week from tonight, August the 22nd, I believe that'll be, 21st, whatever it is, a week from tonight. Look at the front page of TFNN, you'll see it. I'm only looking at 3 patterns: straight down, straight up, arch formation, cup formation. Then you can get a combination of it. Here's this red, we call this a dreaded H when it's red, because if you take out that left side low, watch out below. On the upside, you take out the left side high. That's really very positive. Let's move this away, and you'll see there it is. There's your one dreaded H right there, failed miserably. Here's your second, much larger one. I don't know if it's going to break 336.15, but this is very ugly. The seriousness of this red candle. I don't know if by tomorrow we can reverse it. We'll see. If you look at the GB DOW, this is the Dow Jones. Now, where did I type that? Oh, did I type it here? Did I type it there? GBDOW. Look at that peak D. I didn't put the down arrow in. Actually, I had it the other day, and I didn't get to change it. This is a peak that was made at a peak G/EF. This should be an F/G. I remember I was trying to do this too quickly. Therefore, I made a little error. This is now a peak F. I'm absolutely sure about that. A peak F with a down arrow. So the weekly chart of the Great Britain, United Kingdom, Dow Jones stock index charts made a peak G in the monthly up in the 360 or 355 area, plummets down to the 293s, spirals back up to about 344. Now it's trading at 318, right on the 200 period exponential moving average. Support in the weekly chart. Wow, it better hold there. Otherwise, it's a real problem. And if you look at Hong Kong, HK, and of course, they're going through a lot of problems right now. Dollar, HK, DOW. There you go. Made a peak D in the weekly, peak D in the daily, and a peak C1, C2 in the monthly chart. Very serious decline. It's down 1.71 at 513 right now. That's not the real thing. This is the Dow Jones. Replicates exactly the chart formation, but it is a different instrument. So let me just quickly look to see if we've got a bounce off the trough G. Yep, there it is. A little bit of a bounce from the low of 28.50. Do you realize this morning we were at 2936.50 as a high? We are now at 2850.75 where we were just a moment ago, trying to have a little bit of a bounce here. Oh man, that is a real problem. Do I hear someone? Is there perhaps someone there? Because I'm hearing an echo. Let me just get to this. Oh no, did you just mess up? Hold on, I'll be back. I'm trying to see if there is someone who's been on the line waiting there. Hello, who am I speaking with?
Max.
Okay, Max, how are you?
Fine, fine. Good afternoon. I want to start off by thanking you for all the pinch hitting you do for everybody that's out for a day or two.
Well, thank you. I appreciate that.
How do you interpret the trend today, please?
Okay, so this is really interesting. A question came up. We used the trend over the last couple of days, and they gave insight into the fact that we could have a 9 to 11 point rally, which became exacerbated to the upside yesterday because of the announcement about tariffs. And can you believe it? We actually went to 216 today, which says that between today, within 2 days, you should get at least a 9 to 11 point rally in the E-mini. However, you've got to appreciate that it's a wonderful tool. People who have started, over the multi-years that I've spoken about it have said, what a great indicator. I just had a thing yesterday saying, wow, did that trend indicator from Tuesday give us a fantastic rally? But you've also got to realize that sometimes it can give you the rally from the bottom, so that I like to use it as an indicator to say that if you want to short, rather wait for a flourish to the upside that fails because that will use up that trim gauge. So as it stands right now, as we're speaking, let's see if there's a chance that the low that we just made at 2850.75 is a low that can, 9 to 11 points when you're down 73. That's just nothing. But let's hope that you can get a rally towards the 2863 to 2867 level, just to say, wow, it isn't just selling all day. Now all of a sudden you've got some bargain hunters. You do want to see them. So the question I think you wanted to know is, where's the trend? The trend is actually at 2.30. That's very high. That's number one. And number two is, the higher it goes doesn't mean to say the more you guaranteed that you're going to get a 9 to 11 point rally immediately. It says that you've got to be prepared that there is going to be a counter trend rally, probably when you least expect it, and it might be stronger than you think. And then once it's finished, kind of back to normal. If the trend is down, it should revert back to the downside. If the trend is up, it should pull back just a little bit and then go on to even higher highs. Am I answering some of your question?
Yes. Thank you, Mike. Thank you, Basil.
And thank you. That was Max in Fort Lauderdale. Great. It's a good question, and thank you for asking it, and thank you for being a listener to TFNN. So let's go on to the question I had earlier on, which was, where did it go? Where did it go? Let me just see, XLI. So the XLI I had mentioned before is really much more representative of the industrials, even though it's not the industrials anymore, but they call it the S&P Select Industrials. What we are looking at, there's a phone call. Did I just bump somebody off the phone? Okay, so we're looking at the XLI, which is different to the Dow. The Dow 30, I don't think you can call anymore the Dow Industrials. They're really the Dow 30. And I love the mix. That's the reason why this pullback here I have to respect, because you've got everything from you've got a Walmart, you've got a Triple M, you've got American Express, you've got, that's a cyclical maybe, but that's not an industrial. IBM industrial, Intel and Johnson & Johnson and Disney, no, you've got the Dow 30. And I love the mix. It means we're going to pay a penalty now if that whole combination of really such a balance between the conservative kind of Pfizer's, you've got a Microsoft, you've got a Nike. Yeah, I love the mix. I just think there's one too many financials. You don't need American Express, Visa, MasterCard, JP Morgan, and Goldman Sachs. Maybe there's even too many. But I think for the next big phase, the mega bull market, reinstituting that mega bull market, I'll be talking about that in my webinar coming up today. That talking about what I'm anticipating from this stealth market that nobody wants to talk about. If we say, I love the stock market, I love someone that people talk about. I'll be back. Basil Chapman, Tiger Traditions out.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's just do this. We're looking at the XLI, which is the S&P Select Industrial Spider Fund. I'm opening this up much wider now. Let me do that. I'm going to actually expand a little bit, and you will see something that's very different to the Dow chart. You see these 2, almost 3 rallies back to this green dashed trend line from the all-time high in this particular instrument back in January of 2018 at 80.96. Well, we've failed to make new highs. And in fact, we're making lower highs. And that says to me that this is closer to the reality of what the industrials of this particular sector are doing. But now look at the Dow. You've got this, here you've got 8 months and about 10 months in terms of the tops. But wait a minute, the Dow had this perfect, and I love to look at uniformity in markets, 9 months from the January 26,616 high down to the 23,344 low that was made back in February, I think it was, of 2018, runs up to a slightly higher high, 26,951 in October, 9 months, pulls back dramatically into December to 21,712, and then rallies in 9 months to the high that was made all-time high of 27,000. That was 27,398 in July of this year. And now we're pulling back and we're breaking certain trend lines. We're holding right here, we're holding the 14-period exponential moving average support of the Dow, which is at 26,485. Okay. And that says to me those 9-month sequences tell me that there should be a pullback, but the December low, the way we've rallied so sharply above the 9-period moving average, the first, the 14, then the 9, and they made an all-time high, says that there's just a much greater chance that this is not a G, a leg G with a peak G potential in July, but rather it's a C, and that at some point we could have a fairly decent dip and then a rally to all-time highs. So there are a couple of things that lead me to that conclusion. But at this particular point, the question was asked, in terms of longer-term positions, you remember it was way back. As soon as we got that buy signal on June the 3rd, was like the next day, I said, yes, anyone who wants a longer-term position, you can put some money on right back into your IRA and all that. You can put money there because that's the way we're looking at it. Then you go to the all-time high. that could well be tested because that was, I believe, at 24,800. But at this point, we're 1,000 points above that, or just about 800 points above that. There's still time to be thinking about that. I still think that with that contention, you have a little time. We'll talk about what you should do. Yes, you could give up gains, and that we knew that that was the possibility in this particular environment, that some of those gains could be given up. However, I don't think at this particular time we're going to take out the low of 20,712. I think this trend line right here in the 24,800 area to 24,600, that's really what I'm looking at as kind of what I would anticipate would be really strong support. But I am very concerned that as I go through chart after chart after chart, sector after sector, I'm really looking, look at the way the MACD in the monthly chart of the Dow has yet again deflected lower. And yet the stochastic at 82% is a good sign, but I'm not sure. I want that MACD to turn positive. Not only that, this is a peak E. It's now got a down arrow. It's a sell signal. I'm almost sure I'll have to call it a sell mode by Friday, but 2.5 days to go. Anything can happen, but to change that sell signal to an upgrade means that we're below the 25,900s. To change it and to keep the sell signal but not put a sell mode, you'd have to rally over 26,100 by Friday, because everything about this is saying, hey, we've at least got time and some price, but we might have time and price, or we might just have price. We might just get this over with really quickly because of all the bad news that could just conglomerate in one package coming in over the next 5 to 8 sessions. All right, so that's that. Now I want you to add a question about IYT. Yes, IYT, this is not good news. IYT is at a lower low. It's down 5 at 177. This is the Dow Jones Transportation. This is the iShares. Look, you're about to take out this crazy, very long-term support in the monthly chart, this rising, there's my mouse, this rising trend line, but it's a monthly chart, so let's wait until the last trading day of August. What is the last trading day of August? That is, the 30th again. How many times have we had the last day of the month, also the last day of the week? And that changes things because it means that coming up the following Monday, you open up and you're starting a fresh month. So here we are, not a good sign at all to see this. Let's see the XLU. XLU right now is trading down 2 cents at 60.77. This is the S&P Select Utility ETF. It's just a little off its all-time high. Let's look at the IYR, which is the REITs index. They should be impacted. I mean, commercial property should be impacted. And it is down $1 at 19.17. The all-time high, I forgot to type that in. All-time high was a few days ago at 91.70. That was on the 9th. Let me just put that in there. 91.70 on 8/9. And just make it in gray because we don't know if this is anything serious yet. It's just a little bit of a pullback color. Let's make it just nice and faded. And what letter are we going to call it? I'm going to call it a G/C for now. It's a little complicated. I don't have to make it complicated. Just G/C, uppercase G, uppercase C. And a leg E in the weekly, and that makes it serious because if there is a very sharp pullback from here all the way down to the 1915 right now, if we start to take out 88.80 in the next 3 to 4 sessions, that's not going to be good. Making a new all-time high will be a good sign. So you've got this rotation. This is the whole interest rate sector. Look at Toll Brothers. Toll Brothers down 91 cents at 34.95 with almost record lows in mortgage rates. What's going on here? Look at the HGX. The HGX, as I said before, HGX is coming off a peak F in the weekly chart. I am concerned. The reason why we've raised cash, the reason why we're short, this is a very good reason to say, let's look at the successful stocks of this year and tell us what's going on. So Amazon right now is down 63. I didn't see that. There's the dreaded H pattern. There's the first H pattern. 2035.80 was the high back in mid-July, pulls back, and then crosses negative in all the moving averages, gaps down, and starts a real tumble from this lowercase h all the way down. Now it's making another H. Will it hold the left side support? That's going to be important to, look at that weekly chart, breaking key support. You can tell why I'm concerned. I'm not just saying it because today we're down. I'm talking about chart patterns that have been forming for a while, and I've been speaking about this for some time, that your FANG stocks, Facebook, let's go to Facebook. Facebook, look at this, down 7 at 180, 200 period moving average of 177. Let me look. See that sell signal from 208.66? You tell me, does this look like a dreaded H pattern? Let's just draw it in here. Basil Chapman, Tiger Conditions Hour, Dow's down. Whoa, 683. Not a good sign. Could be a very, very ugly close. I hope it's not a 2-in-1 session. All right, we'll be back for the final segment. And don't forget my webinar coming up a week from tonight. What sectors are we looking at? What stocks are we looking at for buys in the next big pullback, which is happening now?
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I thought I'd just grab this right here. Let me show you something. I just went to the billings, right? This is the semiconductor billings. So January of 2019, 1.8, down 20%. February, 1.8, down 22%. March, down 24%. April, down 28%. May down 23%, and June is down 19%. Huge improvement, down only 4% less than the previous month. But wait a minute, the semiconductor index went to an all-time high of 123.56. just on the 24th of July. It's now at 112. One of the reasons why we didn't want to go back into shorting it is because actually it was holding pretty well. And tomorrow you've got Applied Materials and I think Lam Research coming out with the earnings after the bell. That is going to be so important because I'm hearing that the billings haven't improved, and yet the stock price went to all-time highs. It's supposed to be telling us about the next 6 months, but 6 months ago it wasn't telling us about the 6 months by its price movement. Watch the semiconductors. If by Friday afternoon's close it is below 105, that is a real problem. If it's above 114, it says, hey, this is not bad. Maybe it's looking ahead. We can use that information. Just be careful. I hope there's not going to be a 2-in-1 day where the noontime price was down 600 and then you double it by the end of the day. Please don't do that. Although it might get us to a low much quicker. I've got a webinar coming up a week from today looking at sectors that we want to be looking at and stocks that are really interesting. They've had very sharp pullbacks. They had spectacular 2019 gains, given some of it back. Are these stocks we want to get back into? Very important webinar. Check it out, front page of TFNN. I'm going to hand you over to Steve Rose. I'm going to hand you over to Dave White and Tom O'Brien. Wraps us up today. Have a great trading day. And I think I actually beat the clock for a change. Let's just check that out. Oh, wait, we've still got a couple of minutes here. So while I'm waiting, am I correct? Yes, I do. So let's see. I want you to look at the VIX index all day, and then I completely forgot. Let's go. Oh, look at the VIX. VIX is up 28%. It's up 4.99 and 22.51. Watch the VIX. If the VIX holds in the 22s, it could be a very ugly close. Hopefully, it could pull back to 21.10 or 20.18 with a nice 300-point rally in the Dow. This is ugly stuff. Folks, please be careful. If you raise cash, have a wonderful day. I'll see you tomorrow. Take out the opening.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and